All right, let's talk about the future, specifically your financial future. The world economy is always on the move, but the next few years, they're looking like a whole different ballgame. So what does that actually mean for you and your money? In this explainer, we're going to build a map to the economy of 2026, breaking down the big forces that are going to shape your investment.
Let's just cut right to the chase, to the one question that really matters. When we look ahead to 2026, is your money going to be growing for you, or is it going to be losing its power? That's what this is all about. Let's dig in. So, first things first, before we can even think about making smart moves, we need to get the lay of the land. We need a clear snapshot of the global economy's health. Think of this as our high-level briefing. Okay, first up, the big one. This number right here is the projected growth for the entire world's economy, what the experts call GDP. Honestly, you can just think of it as the speedometer for the planet's economic engine. It tells us how fast everything is moving. Next, inflation. Oh man, this number is so important because it's kind of like a silent tax on your savings. A higher inflation rate just means that every dollar you have will buy you a little bit less tomorrow than it does today. It's a huge piece of the 2026 puzzle.
And here we have interest rates. Central banks use these as the gas and brake pedals for the entire economy. For you and me, this single number changes everything, from what you pay on a mortgage to what you earn in a savings account. It basically sets the weather for the entire financial world.
But that global number we saw, it doesn't really tell the whole story. As you can see here, the economic recovery isn't the same everywhere, not even close. Asia is expected to grow way faster than the US and Europe, and that creates a world of totally different challenges. And, of course, investment opportunities.
But hey, it's not just about the numbers on a spreadsheet, right? We also have to factor in these huge external forces. I'm talking about the big global headwinds, the political and climate pressures that can just show up and totally change the direction of the markets. So what exactly should be on your radar? Well, 4 big things. First, tensions between major world powers. The kind of stuff that can mess with supply chains. Second, you've got regional conflicts that make markets super jittery. Third, trade policies are always changing, rewriting the rules for businesses. And finally, you have the absolutely massive economic impact of policies designed to tackle climate change.
It really all boils down to this one idea. In a world where everything's always changing, the only thing you can really count on is uncertainty. Now, for an investor, that doesn't mean you should run for the hills. No way. It just means you need to build a portfolio that's tough, resilient, and ready for anything.
Okay, but it is not all doom and gloom. Let's pivot from the risks to the absolutely incredible opportunities. Because technology isn't just evolving anymore, it's causing these massive tectonic shifts that are creating whole new industries out of thin air.
And leading that charge is artificial intelligence, or AI. For just a second, forget all the complicated definitions. At its heart, AI is just about teaching computers to learn and solve problems the way humans do. And believe me, it is the engine that's going to power the biggest changes over the next decade.
So how does this actually play out in the real world? Well, it's pretty much a 3-step dance. First, AI comes in and automates all the boring, repetitive stuff, making companies way more efficient. Then it crunches mountains of data to find patterns we could never see. And finally, that new knowledge leads to brand new products and services we can't even imagine yet. And AI isn't the only player on the field. You've also got blockchain, which is completely rebuilding how we handle secure transactions. And then there's the huge push for renewable energy, which is kicking off one of the biggest investment cycles in new infrastructure that we've seen in a generation. It's a big deal.
Okay, we've gone over the forecast, the big risks, and the massive opportunities. So the real question is, what do you do with all of this information? Well, this next part is your practical playbook for investing in 2026.
Look, the foundation of any smart strategy, now or ever, is diversification. You've heard it a million times. Don't put all your eggs in one basket. For 2026, a balanced portfolio might look something like this. A smart mix of stocks, real estate, bonds, and maybe even a little bit of commodities and crypto. The key word here is balance. Let's break down a couple of the classic choices. With stocks, you've got the chance for really high growth, and you can buy or sell them pretty quickly. But you have to be okay with the market's ups and downs. On the other hand, with real estate, you get a physical thing you can touch and maybe some steady income, but your money is locked up for a lot longer. It's really a choice between growth and stability.
Now for the wilder side of the portfolio. You've got things like commodities, think gold, which can be a great shield against inflation, but their prices can be all over the place. And then there's crypto, which offers truly revolutionary potential and huge upside, but it comes with extreme volatility and a pretty uncertain future when it comes to regulation. So how do you protect yourself from all this uncertainty? You hedge your bets. You have to think defensively. You can use real assets to protect against inflation, spread your investments across different countries to handle geopolitical shocks, and mix your long-term goals with some safer short-term ones. Wow, okay, we've covered a ton of ground, from global economics to crazy new tech. Let's pull it all together for one final mission briefing. What is the single most important message you need to remember as we head towards 2026?
It really just comes down to these three things. First, stay informed, so you actually know what's going on. Second, stay agile, so you can pivot when things change, because they will. And third, and maybe most importantly, stay diversified, so that your portfolio is built to handle whatever the world throws at it.
Look, at the end of the day, nobody has a crystal ball. No one can predict the future perfectly. The only thing we can control is how we prepare for it. So I'll just leave you with this final thought. The future is coming, and it's full of surprises. Is your portfolio truly ready for it?